Now, in all the four scenarios that I mentioned this morning, we are seeing oil prices to increase just in the next couple of months. And then, depending on the scenario we're in, they will start to gradually decrease, right? But one of the key takeaways I said from my presentation is that prices in the oil markets have moved structurally higher because we are facing the largest supply disruption that ever occurred in the history of the market. So we have lost 1 billion barrels. By the time this crisis is over, we may well lose another additional billion barrels. So it's an extraordinary situation. From this point onwards, prices are going to go up and then gradually come down if we are correct in assuming that we are seeing a resolution of the crisis. What could change is the behavior on the demand side. So far, we have seen a huge readjustment taking place in this region and in China in particular. Now, if that persists, then the upward pressure on prices were actually going to be less, right? But if China goes back at importing something like 10, 20, 12 million barrels a day of crude, then that will exert a further upward pressure on prices. So there are a lot of moving parts, but all in all, we are going to see high prices at least for the next 6 months. So, I mean, there is little so far that governments or businesses can do to address the crisis because this crisis is beyond their reach, right? So we are talking about a reduction in the supply coming from the Middle East, and that's very difficult to replace. Now, what's happening is that some barrels are coming from the United States to the rescue, but we are talking about very little amounts in comparison to the size of the supply disruption. The only thing that needs to happen right now is the Strait of Hormuz need to be solved. If we are still in this state 3 months from now, 6 months from now, we are in much deeper trouble. So the good thing is that before coming here, wonderful gathering, by the way. So I'm glad that you keep on investing in getting all the people here. But last week I was in China, and one key takeaway from my conversation with China's policymaker is that they see this crisis as an opportunity to invest more in energy security, and for them, energy security is more renewable. Now, this comes with a big caveat, right? The caveat is that it's difficult to increase renewable penetration, specifically if you're about saturation. But in the long term, that is a possibility. So there's going to be a renewed push to move China into more renewable, if possible, in the next few years. Now, for the other countries, the countries that are having a lot of trade with China, they will also be pulled into this direction. But the reality is going to take a long time to basically see this coming through. For the next few years, we will still see a increase in the LNG demand in this region, driven by this region, albeit probably slightly less than we would have expected in January as a result of this crisis. So we're probably losing 2% of LNG demand as a result of this crisis.